Hey guys, it is October the 20th, still a little bit under the weather, feeling only a little bit better today. It's a very mixed market today, as per usual. There's a lot of companies that reported today, and it's all over the map. Some are good, some are bad. I'm definitely going to go through the rails tomorrow, so stay tuned for that. But for today, I'm largely speaking going to just focus in on Tesla. Let me share my screen. Past performance is not indicative of future returns. If we look at the major market indices, they've really just been dancing up and down across the like flat for the day, more or less. You've got energy recovering quite a bit. And other things that I would just note is that Tesla obviously getting beaten down, and that's despite a pretty strong quarter. Now, let me just go through Tesla's earnings reports briefly. This week, as far as economic indicators go, there's really nothing that I would say was particularly notable. Things are going to come out. September numbers just aren't going to help us very much. We really are going to start to see the picture as we get earnings or as it gets closer and closer to the winter. Those are the major things. They're going to create a whole bunch of crazy in this marketplace. So during this period, things are just going to bounce around, particularly, I think, to the extent that there's some short covering or some people just bidding things back up to neutral for the bigger tech earnings next week. That's kind of is what it is. Now, we have tomorrow. So we've got a few after the close today still to report. Next, tomorrow we have American Express and Schlumberger probably are the ones I'm going to be focused on. Whirlpool will probably give us some insight into industrial production and what's going on in Europe because they do have some arms that do that sort of thing there. Prologis, which reported yesterday, had an amazing quarter. And they mentioned that because of the increased demand of Ukrainians coming through to continental Europe, they were seeing a pretty good result. Now let's get into Tesla. With Tesla, I mean, this was a very strong quarter, and it truly is the concern that people have that Elon is going to sell more stock to pay for the Twitter purchase and acquisition, which he was actually very positive about on the call. We're seeing revenue up 56%, operating income up 84%, and net income up 200%. And, his documents that he used as a presentation for call were amazing. His actual numbers filed in the 8K were even better if you look at it, because you can kind of see that even the energy generation and storage business, which is usually like up a little bit, was up dramatically this quarter in particular, especially if we compare them to last year. I mean, it was just by any metric extremely strong. And as a result, what I'd already said was a very cheap company from a P to growth perspective has gotten even cheaper. I additionally want to just show you this slide because sometimes this gets missed. From a cash flow basis, this company is throwing off way more cash than it has before. Free cash flow, you can kind of see how much that's upticked in the last year. Some people prefer to see it on an adjusted EBITDA basis, which would take out some of the acquisition stuff that's going on. But either way that you look at it, it just looks phenomenal. So Tesla was an exceptionally strong quarter. Now, if Elon's going to sell and put pressure on the stock for that reason, to the extent that you haven't gotten your slug of it, I do think that you want to just put limit orders in very slowly but surely and take it in. Now, realize too that because this is such a large component and because of the way it was added to NASDAQ as well as to the S&P 500, there are probably funds out there that are underweight Tesla that will also be net buyers going in. But for now, the day traders kind of are having their time of it as they, try to push it down to 200 and back up. I have some limit orders that are in underneath 200 just to see what's going to happen in the next few days. But in fairness, even here is a good deal because there's nothing to stop Tesla. Their dynamics are great, very strong, and pretty much everything is lined up for them. And again, if you get a China reopening, Tesla is 100% a company that will benefit from that. And with that, I will stop the share. Any questions? I'm keeping this as the world's shortest call.
No, cool. So I think what you're saying is the financials on Tesla earnings are really good.
Really good. Some of the
Yeah.
strongest season. Yeah.
The only thing holding it down is him selling his stock to buy Twitter. So cool.
Yeah.
So long term, very good. Like start building a position. That'd be the best way to
Yeah.
trade it.
I think that's the best way to trade it because it's very hard. Like if you were to short Tesla, if you're a day trader, I can see you being very nimble and getting in and out. But otherwise, if you were to take like a meaningful short position, I think that's a little bit dangerous because from a valuation perspective, it is definitely undervalued here. I'm not sure why others aren't coming out other than they also know the same thing that I do. So timing can sometimes be everything, but it's cheap, right? All of its markets now are growing, whereas before this energy portion, you weren't sure which way the batteries are going to go, et cetera. Now it looks like he's going to get it done one way or the other. It was really interesting because lithium is one of the constraints for him, lithium cobalt. But there were all kinds of things he had to say on it. But I do get the impression that where there's a will, there's a way. And this man has been really impressive in the way that he's executed.
Right. But the fact is, he has to sell stock. So,
I mean, yeah, he could get financing too.
but don't they do that on a loan to value basis? I mean, I,
For I have to look at the numbers. You're right. I still think he probably could get financing for it, but
okay. Also, yeah, victory lap on Sherwin-Williams. Come on. You killed it on that.
I mean, I don't even feel like I'm particularly bright for that. We will have to see because the company does report earnings in a couple of weeks. I may just allow it to trade into earnings and then come off of it. PPG had kind of a rough quarter of it. PPG does the industrial aspects of paint. So they'll paint everything from an airplane to a big commercial warehouse, something like that, or the lines in the middle of the road. So they had a couple of parts that were sparks of positives. And for example, they did see, because of oil prices mitigating a bit, a slightly better environment. Sherwin-Williams, though, I think has a tougher time with it because they do have a lot of competitors that have entered the space. And also, housing isn't doing what it was doing before. So you're kind of going into the third quarter, which is a rough quarter in general. But I'm sorry, you'll be going into the third and fourth quarter. Right now, we're going to report the summer months. And it's 50-50 to me that that the street is lowered down far enough. But in general, at this type of earnings multiple, I'm not thrilled about Sherwin-Williams. I don't know another way to say it. It's not the strongest bet you could make one way or the other. And the fact is,
Well, what
if we
about the
start,
cost side?
what's that?
What about the cost side?
They'll benefit just a touch, but then the comp is relative to last year. So they'll benefit just a touch off of the decrease in oil prices. But I mean, not a lot. Like, you know what I mean? Like this might be the only 3 month span, but then the 3 months that we're comparing were to easier or lower comps in oil and gas last year. And
Right.
so these next 3 months, so the quarter they're reporting will be July, August, September. So the summer months where you do have high painting season, but you'll be comparing it against last year. And then it's just whatever guidance got brought down to. Last year was a disaster for many reasons, not the least of which is you started to have a rising oil price. And, um, you know, if you're also comparing it to last year, then you also, you had the benefit of the housing market still going like this. Now you have the housing market going like this.
Right.
It's a little bit, it's a funky quarter for people to be so bullish on Sherwin-Williams. I know that there are people that are bullish on it. I think it's a rough bet. But like I said,
They're going to have to give guidance, right?
yeah, I can't
And
see them giving.
oil will be higher the next 3 months. I'm thinking.
I think oil will be higher, but I think more than that, I think housing won't recover that quickly.
Oh, right, yeah. But that's not a cost side. That's a revenue. Okay.
Yeah. Yeah, my real concern for Sherwin-Williams is the timing of how strong the bulls are coming in, or how strong the bulls were coming into this one.
Why are they bullish? What's the bullish story?
I think it's just been clobbered so much. It is a good brand name, don't get me wrong. I just think it's a good bet, and I agree that it's a good brand name. Some people are using higher end paint, sure, I'll give it to you, right? But at the same time, I just think that if you're going to cut costs anywhere in a house, I actually think you do cut it in paint. Like you don't necessarily cut on fixtures that are going to be permanent. You don't necessarily cut on your roof. Do you know what I mean? But
Right.
paint, people
Yeah,
can
that's a good
actually
point. Good
pick a
point.
cheaper paint. And then you got to realize too that like, you've got a lot of competitors now to Sherwin-Williams that have come in to try to, given how expensive raw materials had gotten, there's been a lot of alleviation of that, lumber costs, steel, et cetera. But given how expensive that some costs had gotten, there were other players that came in with more affordable paint for that reason. I just think the timing's bad. I do think it's a good company, but I think their timing is bad. But, I'll probably ride it and then get out of it before earnings season, because I've just been, the way that this market is traded earnings, good earnings has resulted in companies getting clobbered, as with Tesla for some exogenous reading, which I kind of get. But bad earnings, somehow I've seen stocks rally for no reason. And I think that's crazy too. So I think mostly I'm just going to try to stay out of earnings season.
Great. Okay. Thank you, May.
All right. Take care, guys. Stay healthy, everyone. Bye.